Did you know that if you or your client sells a car, boat, jewelry, or even furniture to help with the down payment or closing cost, that money can be used in the loan process, but only if it's properly documented? That's right. Personal property sales are allowed when buying a home, but without a paper trail, it could cause delays or even loan denial. So today I'm going to break down exactly how to document the sale of personal property, what lenders need to see, and how to avoid hiccups during the processing. Let's get into it. If your client is selling something like a car, a motorcycle, a boat, jewelry, furniture, or any other personal asset, they can absolutely use those proceeds towards their down payment, closing cost, or cash reserves. But the key is having a paper trail. No documentation means no credit for the funds. Even if the money is sitting in their account, lenders have to prove where it came from. There's one important rule you need to know. The buyer of the personal property cannot be involved in the real estate transaction like the home seller, or involved in the mortgage transaction like a co-borrower or someone on the loan. Why? Because that could be seen as a conflict of interest or an attempt to manipulate the transaction. So if your client is selling personal property, here's exactly what the lender will need to see. Proof of ownership. So something that clearly shows the borrower owned the asset, like a title, registration, bill of sale when they purchased it, or an insurance policy listing the item. Proof of value. An independent, reputable source must verify the item's market value. Examples include Kelley Blue Book value for vehicles, appraisals for jewelry or antiques, or comparable listings for similar items. Proof of transfer is next. So a signed bill of sale or statement from the buyer confirming they purchased the item. This confirms the items changed hands. And 4, proof of funds received. So your client needs to show that they actually received the money. Acceptable forms include like a bank deposit slip, a bank statement showing the deposit, a copy of the buyer's check, like canceled or cleared. So the pro tip here is the cleaner and clearer the documentation, the faster the loan will move through underwriting. So if the amount of money from the personal sale is small compared to the overall funds needed to close, lenders may be a little bit more flexible. In some cases, fewer documents may be accepted if the sale proceeds are a minor percentage of the borrower's total contribution. Still, it's always best to prepare for the full documentation up front in case the underwriter asks for it, because they typically will. Imagine your client is under contract and planning to use $5,000 from selling their motorcycle for closing costs, but didn't track any of the sale details. Without documentation, the lender may disqualify the funds. So this could create a funding gap and worse, delay or cancel the closing. So the key takeaway here is if your clients are selling any personal items to help purchase a home, it's critical to get everything documented early. So if you're working with the buyer who's planning to sell personal property, here's what to do. Ask about it early. Find out if they plan to sell anything for the down payment or closing cost. Collect documentation. As the sale happens, don't wait until underwriting to scramble for it. And finally, talk to a lender who knows the rules. Not all lenders handle asset sales the same way, so get clarity up front. Got a client who's selling personal items to help buy a home? Book a call with me today. I'll walk you through the documentation process and help you avoid surprises during the loan. And if you found this helpful, hit that subscribe button for more mortgage tips and homeowner insights. Click the link below. Let's schedule a chat and let's keep your deal moving forward, smooth and stress-free.